Good afternoon. This is Clark Neighbors with BIS Commodities in Cedar Rapids, Iowa, with the market recap for the week ending June 16, 2017. Just about the first day of summer. Keep in mind that's kind of a key day going forward in decision making in the summer months. For the week, kind of an interesting up and down choppy week we continue to see, especially on the corn. Corn down 4 cents on the week, on the July 3 cents on December, and this is after seeing an uptick of about 3 to 4 cents today to create that. Beans are down about 2 to 3 cents on the week. The stellar market this week, if you will, for leadership to the upside is wheat. July Chicago wheat's up 20 cents this week. Wheat markets come out of a dismal stage. We've seen a lot of short covering in the wheat over the last few weeks, especially this week. Conditions of the spring wheat in the Dakotas, along with protein concerns in Kansas and some of the lower plains, is causing for some firmness in the wheat market. We'll see if that continues and also maybe help us buoy or steady a grain market that continues to be very lackluster. This afternoon after the close, Commitment of Traders report come out, and on corn, in most people's eyes, keep in mind these numbers are as of Tuesday, but now 3 days later, I think most are going to be somewhat surprised that the funds short on corn is very minimal now, somewhere in the range of 50,000 contracts or less. This is after being short a couple 100,000 contracts 2.5 weeks ago. We have not seen much of a rally in short covering by the corn as many people had hoped, at least at this point. The question going forward now with the funds and this time of year, will they want to go short? We've seen some short covering on wheat, but both wheat and beans, most estimate, still short both commodities somewhere in the 80 to 90,000 contract area. As far as on corn, since January 1st, December futures, I'm just going to concentrate on the new crop futures at this point, have had a trading range of approximately 30 cents. 378 is the low back in the latter part of March, and a high here on June the 8th, week and a half ago at 409. Very, very range bound, and it ties in with what's kind of been an odd growing season so far. Kind of an early wet, obviously spring, delays in some areas, kind of unevenness, cool weather, again followed by some hotter temperatures over the last week or so, but followed this week, or the latter part of this week, with some better rains and rain potential going forward over the next 6 to 10 days. Obviously nobody knows what the weather's going to be, and that's going to be one of the critical factors going forward. Speaking of critical time, and I mentioned earlier, there's a seasonality in September corn over the last 15 years from June 21st, which is next week, till basically the last week of July. September corn has been down 12 of the last 15 years. The only 3 years it wasn't down was 2 years ago in a late little summer rally due to a weather scare. So 2015, 2012, well-known drought, and also 2002. So considering if we do not have any major weather issues going forward, that's pretty key to keep in mind. So it brings us into this critical time frame over the next 30 days of, especially in new crop, using rallies to make some sales and get some positioning going, both on cleaning up the old crop and the new crop. Those of you continuing to hold old crop corn, keep your logistics in order, keep that seasonality in mind, but also corn basis, which is, as a general rule, fairly weak around the Midwest, is going to have a tough time firming up much unless there's something of a flat market or a negative market, because if we do see an uptick in the market, we do see movement, which causes more softness in the basis, and there is a lot of old crop corn left to move. Keep in mind we'll get an update on the corn stocks, the bean stocks, the wheat stocks, and also a final planting here at the end of the month. Beans is another story. We continue to see larger crops out of Brazil, In Argentina, we're in that major transition time frame with exports. So demand continues to be very good in both corn and beans. The question is the supply sector going forward, and obviously this is a time of year where supply is being determined. Cattle market lower this week. We've had a huge move in the upside in cattle in the cash market. I believe a 48% increase from the fall low to the spring or early summer high this year. You could argue this week the cattle market feels a little tired as the cash market has kind of backed off. We'll see if that continues. But all in all, going forward as far as the grains are concerned, critical time frame as far as making decisions the next 30 days, please feel free to visit with your broker at BIS Commodities on ideas of locking in some new crop. Also, weather is going to be the main driving force. To date, we haven't seen much reaction on weather as a general rule. We'll see if that changes. June 30th again, planning report, and also grain stocks report. Next week, supposedly the EPA could come out with the renewable fuels targets for 2018. So that's another thing to watch. We wish every father out there a happy Father's Day this weekend. And again, if you have any questions, feel free to call us at BIS Commodities. Phone number is 800-373-2525 or biscommodities.com. Have a great weekend.